Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for September 2nd, 2020. Excuse me. All right, let's see what happened today. What a day. So yesterday had pushed tentatively to a new 10-day and a 30-day high. And now, against all my advice and expectation, has a gap up. Momentary sell-off and then pushed strong high to make a new 10-day high and a 30-day high and closed in the top quarter of the day. So just a powerful move with a lot of leadership in tech land today. But the intraday move after the sell-off was quite extraordinary. So we're looking at a 10-day range that is just off the chart good. This 10-day range is almost 6%. That rate of gain is very hard to sustain. That's what I've been saying for the last 5 days. But it's still true. The only thing above us here with market at all-time highs is the statistical target of 365, which is the Z3 excursion. Today closed well above the Z2 line, and even the RL10 closed above the Z2 line. So that's just another extraordinary move. To have it close out beyond Z2 is quite remarkable. In keeping with the comments from yesterday, all I'm doing is simply raising my stop. In this case, I'm probably going to come right to just below the RL10. Like, I want to keep even a piece of today's gains. So I'm looking at probably a 1%, which is basically about 1 ATR. I'm looking for a stop around 355 to get out. So that locks in another great big piece of this extraordinary move from the 10-day low. With no resistance overhead, the only thing to do is frame the trade to the downside. And what do we have? We have the statistical RL10 price at 355.9, the Z2 line at 355.1, the baby dragon and the low of the day at 353. The skin of the dragon, which is about the 2.5% sell-off at 350, spine of the dragon 347, the RL90 and the Z1 together at just about 346. Southern skin of the dragon and tomorrow's PSAR exit 344. So I cannot justify giving back that much. That's why I want to really make hay on this extraordinary move. I want to make sure I lock that in. Today's PSAR was 342. The 10-day low tomorrow will be 337.54. So today the 10-day low was here, but tomorrow that 10-day low, yesterday the 10-day low was here by the Bollinger Band mean, and then tomorrow that 10-day low will be up at 337.54. Bollinger Band mean 336.5. The Z1 and the peak RL270 from the past, they're right around 326.5-ish. 30-day low all the way back at 319, and that is an 11% move from the 30-day low all the way to the 10-day high. That's just remarkable. If you projected that would be, 100% per annum year. That's how extraordinary this move has been. And, normally we see like leg 1, pause, leg 2, pause, leg 3, that the first leg was the stronger leg. This is reversing all of the previous historical norms. As people start leveraging their bets for this crazy election, the election is so volatile that the portfolio insurance costs of VIX puts in calls is just at historical highs. So, and it's going to get crazier before all is said and done. The most likely scenario to me is that Trump wins the election on the day of the election decisively, but Biden starts catching up as they start counting all of the mountains of mailed-in ballots, and so there will be rife with controversy ahead. So troubled waters ahead. Let's see what worked today. I'm going to hustle through this tonight for a change. So the S&P ended up, after being down earlier in the day, ended up with a pretty nice move of 1.47, so 1.5% in the S&P. The Russell underperformed at 0.8, and the Dow outperformed at 1.56, so slightly favoring the larger caps versus the small cap speculators. To the upside, the sectors that had the strength today, there was healthcare at 2%. There is basic materials at 2.25%, and the VIX continues to rise at 2.5%. And then in the battle of the triple techs, today it was TQQQ up 2.8%, despite being down significantly intraday. We'll see that one here in a little bit. And it outperformed the broad techs at 2.56, so slight hat tip to TQQQ. And remember, TECL is like 3 times the XLK broad sector, which was up 1%. TECL was up 2.6. The companies that outperformed, Boeing slightly, Nucor, Caterpillar in the materials sector, Microsoft, Facebook, Intel, NVIDIA, Google, and Twitter crushing it on the tech sector. Goldman in the finance sector. This is that Ackman hedge fund at PSHZF. That was a nice chunk. And win at 3.5. To the downside, so we had the S&P at 1.47. Underperforming the sectors then was, close but no cigar for finance, consumer discretionary, and technology between 1 and 1.4. Wheat and precious metals was up 1%, even though we're going to see that silver was down significantly, 2.25. Wheat, nevertheless, on strength in gold, was able to come in at 1%. Japan 1%. Commercial property, Simon Property Group 0.95, and treasuries up 0.95. Nice recovery there. Brazil basically flat at 0.16. Then into the red territory here. More of the sectors underperformed today. So we have emerging markets minus 0.22, energy minus 0.5, Mexico minus 0.8, clean energy minus 0.86, silver 2.25, oil 2.5, oil exploration 2.6, and then some of the companies underperforming: Cisco, Cliff and Home Depot, Walmart basically breaking even, and then big losers today on a day when the market was running amok north. Big losers nevertheless was Sensebase, Virgin Galactic, Apple, Devon, Alcoa, which bucked the trend. Alcoa bucks the trend of materials, which were good. Nikola and Tesla. So Tesla at one point was down 14% today. And when you add that to previous about a 10% sell-off from the last run-up just prior to the split, there's almost a 20% sale on Tesla. And we're going to see on the intraday trade what exactly happened there. But first, I want to send kudos to Katherine on her monthly check-in. So Katherine hasn't attended any of the workshops. She just took the online version of the hybrid trading workshop as a self-paced self-study, and has just been beavering away at it for a couple months, and has put in the work of just a little over 300 paper trades, and really putting in the effort to get it done. She's been mastering the kata. She was stalling here in the middle and decided to focus just on the kata symbols of the Dow and EWZ, which really started to pay off for her. So she's got a really nice equity curve through here. Even her drawdowns are very measured and controlled. After some initial big gains, she's kind of stabilizing in the 0.15 to 0.2 range of expectancy, so that's getting better. Her rolling 30 and 60-day averages are showing the evidence of refined technique and sharper focus in here. When I notice her performance stats, we have a statistically significant sample. Her worst trade was a -1R, so she's got a very tightly controlled risk profile from over 300 trades. That's pretty darn good. Best trade was 4.31, so she has an exposure to the fat right tail. So she has a nice normal histogram with a tightly controlled risk and open to bigger gains. Her win rate is about a coin flip, 44 to 46%, but her payoff is 3 to 2. So how many times a day would you want to play a game where heads you win 3, tails you lose 2? You'd want to play that as often as you can, and as long as this performance statistics maintain that, then you're going to get an equity curve that looks like this. That's just outstanding. What I really like is she's got 3 months now, and we've gone through a variety of market types in that time. 300 trades, so that's 100 a month. That's 25 a week. That's 5 a day. She recognized that she needed to focus on just 2 markets in order to build the experience base and to narrow her focus, to sharpen that focus. And that added an additional 10R in the last 2 weeks, reduced anxiety and stress. The cumulative R has settled in nicely and is starting to rise. And she is surviving and feeling more comfortable. And now she's ready for live trades in September to keep doing the prep work, take the trades, keep it simple, and maintain the comfort levels. This is entirely consistent with what we've learned over time, over the last 10 years, about trading as a craft profession, that you have to put in the work. And it's not just doing reps, it's doing them correctly with all the preparation material and respect for the game. So perfect practice approaches perfection, not just practice of any type, but it's perfect practice. So I just want to acknowledge the hard work she's been doing. I find it inspirational. Her SQN is showing that this is not random noise, but this is pretty powerful stuff. So +1 to Katherine. I want to just highlight what's been going on with the swing trades. As you know, I have been reducing the number of swing trades in order to emphasize on the intraday trades. But what I've been doing is using the strong intraday trends to the upside to retain a fifth of the position and start building swing trades on the basis of market's money. In that way, I feel I'm within my risk tolerance. And so, as an example, here's the core position in TQQQ. And so these are daily charts. And what I've been doing is when we got this supported spring crossing, pulled back, never even came through the dragon, but resumed, I day traded this one on bar number 1 and retained a fifth of that position. Bar 2, I kept the swing trade when it broke out above bar one's high, and it kept 1/5 of the turbo trade. The same thing on 3 and 4 and 5 and 6 and 7 and 8 and 9. So I've got essentially almost 3 full positions, all paid for with market's money, and the average price level on this is going to be right around 140. So this is how I reconcile a desire to reduce risk on swing trading, but still be open to the possibilities of these big, strong trends, which has turned out to be the case. So that is the core trade in TQQQ, and the turbo trade. Let's test. Yeah. So here was the day trade now in TQQQ. So we had yesterday, it closed here. There was a big gap up. And just like yesterday, I let it sell off the usual distance, and I bought the supported spring crossing, and then that collapsed. I took about minus 0.5 R on that one. I didn't let it come all the way down. It just started to fail. I have been so conditioned on the long side that I kept waiting for it to find support, and then by the time this move came down to the previous VWAP, I realized, well, I had missed it. So the one I think that I missed was, I think I needed to either be short at the Bollinger Band mean or at the Z1 collapse, because that was also the RL270. But I was already on the downside of the VWAP, and I felt like this could correct at any time, but it didn't. It came all the way down to the previous VWAP. I bought the supported spring crossing. That also collapsed right after I bought it. So that's about a minus 0.3 execution R. So I'm down about 1 execution R on the combination of those. This held support at the same level. I rebought the spring crossing, made bank in order to offset those losses. So I'm about flat for the day. This one was an effort where I had a low, a higher low, another higher low, supported spring crossing in the usual way, and nothing. And there was maybe a fractional in here. I also was geared for the long side, and so I missed this one again. I think I should have had the collapse below this RL10. I needed to have been short either here or here, and certainly here. But by this time, I was just I was into the TQ or into the Tesla trade, and I just missed this short. But I was able to get the supported spring crossing in the usual way with the stop at the PSAR, Wu Wei exit. So when it takes about 3 dots above, I just pick up the Bollinger Band mean. And here I had gotten the second position in, and it was just kind of stalling. And I moved my stop up to here, and it exited shortly afterwards. So that's about 1, 2, 3, maybe 3 execution R's net out of TQQQ. And then this, after I got out of the turbo, there was another reentry for to invest in the swing trade. So this sold off and then recovered. So I ended up getting the swing trade position here with an entry about 170. The other swing trades of note. So I'm doing the same thing now in Twitter. We started alerting in the podcast when it was back, when it sold off to 28, and we played a Z3 breakout here, bought the first position, second position, third position. So these are all intraday turbos. Like this was a great turbo trade, and I just kept 1/5, and that was my third position, fourth position, fifth, sixth, 7, and 8. So I got 2 positions added today from this rocket ship of a entry in Twitter. So Twitter is closed up around 43, and so from the initial entry of down around, say, call it 30, that's a nice, that's a 50% move on the first position. And then, so we've got an average entry in this at about 36. and our standard exit is about $1. So you can do the math. That's building out to be a really nice swing position with markets money. The turbo trade on that one started off with a hybrid frog, which went nowhere, and I cashed it at the VWAP. I waited for the supported spring crossing, used the Wu Wei exit in the usual way, cashed 2 execution Rs. Immediate re-entry, Wu Wei exit, cashed 2 execution Rs. Waited for the spring crossing, Wu Wei exit, got the first one. When it broke through this Z3 pinch here, took the second position, then locked this in around 43. It ended up continuing to work. So the Twitter trade is just continuing to march. And as you can see, where's that Twitter? Is this Twitter? Yeah, here's Twitter. It ended up closing up at like 43.67. So the Twitter trade, the intraday Twitter, ended up moving all the way up to about 43.75, and so I was able to move this north about another 50 cents on those 2 positions. So we got this really contributed to the nice swing trade in Twitter. Same thing with treasuries. So we had built, when treasuries sold off harshly, a Z3 excursion, and I bought the second spring crossing, added, then cashed the supported fall crossing. I tried the rebound, and this gap down caught me, so we just got a fraction. I then shorted this, and then the swing didn't follow through, so I covered, and then got a day trade, and then the second swing position here. So this one closed pretty well. So we've got a swing position with an average price of about 163 with a $3 stop, and I still think the defensive play here is if we get any kind of weakness, significant weakness in SPY, that thing can go to 170. And then the last time it got to 170, we had programmed the move to 180 for the next leg up. So that one is a swing trade that's starting off reasonably well. The final one is the Clean Energy Portfolio, PBW. So this is one that has just been quietly just continuing to grind north. I just nothing spectacular, but man, it's just like people are buying the Green New Deal. I just think we have to have a Green New Deal no matter who wins the election in order to rebuild cities and low-cost housing to get people back in shelter, especially after we get ready to foreclose on them. So here's the first position on the supported spring, a second position on the Z2 breakout, the next breakout at 3 and at 4 and at 5. So we got 5 positions in. I've moved my stop up now to the Z1 and just continuing to march. And as long as this thing, I mean, it's harder to get a more orderly, lack of volatility move than that. So as long as it's riding that trail right there, I'm happy to just keep marching these little stops up as we go, kind of PSAR and Z1, and just continuing to work. So those are the 5 swing trades that I'm using, and the turbo trades that go into it. I think I showed these. Yeah, the Twitter trade is working. This was the Qs, and then this was the one in Tesla that today. And this was just amazing. So I have been kind of hands-off. I've been burned in the past on Twitter Shorts. So I missed entirely the collapsing dragon, which happened here and here and here. So I missed all of that. And then I missed this collapsing dragon, but I finally got it together and got this one, because I saw this being the potential here, and the Z3 breakout and a collapsing dragon. So we got the first position short here with the Wu Wei stop, and the second position on that second leg down of a collapsing dragon, and then basically a hybrid frog box off the bottom for a nice gain, and then the supported spring crossing just in the usual way. So that's an entry from 420, and then the Wu Wei exit. Tesla ended up closing at 447, and so this thing went here from 440, basically back up here to about 440. It came all the way back up to the Z3. So this position made some bank on this orderly move. So the point that I want to raise on this one is that at this point, this maximum sell-off point down here was over 20% from the swing high when they had gained the 12%, and then on the day of the split. And so that 12% plus this 14% intraday made this like almost a 25% sell-off. And then just notice that the excursion away from the VWAP, and that's what made this like a return to the VWAP trade so attractive. So yeah, the VWAP was selling off, but this sell-off here was an extreme exaggeration, and I think that was just people trying to lock in whatever they could of the previous gains that they'd made, and from leveraged positions, and then that's an overreaction trade, is how I interpreted that. Okay, so lots of good day trades, the turbo, and then how those are connected to the swing trades. That's worth your study. And then, like I said before, a really nice workup from Katherine on her check-in. So let me just shift real quick now to the daily report. And I want to hustle through this. So still quiet, favoring the swing trades, as if we needed to know. Overbought on every dimension. Look at that 237 on the 3-day NDX. We are almost 14 ATR, 15 ATR above the 200-day moving average. This 46.1 ADX is like 2.4 sigma. That's how crazy this 14-day move has been. Risk Z is saying, dudes, warning lights, be ready for those sharp sell-offs. It hadn't happened yet, but be ready. The Dow Chemical, Caterpillar, Amgen, Honeywell, 3M on the min pains. Max pains, Chevron, Apple, Boeing, and what is it? I can't even remember their name now. The new add to the Dow. Name is escaping me. Safe Search or something. Let's see. Still Chevron, Conoco, ExxonMobil, and Schlumberger. So the energy sector has really been getting smashed. Just one doji today in Chevron. And then Chevron and Walgreens still showing well on the auto framer. But this is really the story of the day. Everything breaking out to the upside. Just amazing altogether. DuPont, IBM, Coca-Cola in the Dow. That's their gains right there. Some really significant ones. I didn't get any of them. I was trading what I was trading. ETFs 31, one doji in Brazil. Again, the story of the day is how many of these were just breaking out to the upside, with the exception of the severe breakdown in energy. Lots of good news stories well out of their river. Hard to go wrong there. Some symbols that are pinching among the Dow and our specials. And then some real possibilities here I like the fact that XLE is pinching. Nice symbols in here in the energy sector for the auto framer: Chevron, energy, and oil and exploration at better than 2-1. Intel and Cisco in tech space are still attractively priced compared to their long-term um, fair value, as is treasuries and gold. So that's good for gold. There's still more room available. And then the ones that are overheated, perhaps: Boeing, Procter, McDonald's, Disney. Some just two daily squeezes here: Boeing and silver at better than 2-1, although Brazil and Cisco are very close. And so is Chevron. That's why I added them in. The summer has resumed. These are the ones that Salesforce. That's the name. Yeah, Salesforce CRM. That's given back some of that 20% gain that it had on being announced that it was going to be added. Energy and gold are lagging a bit here. But here's your strength leaders: XLY, the tech, the Qs, and then the U.S. large caps themselves. The big story of the day, again, just how many things dominated in the breakouts, and especially in the ETFs. Just holy mackerel. Just a wild, just, it feels like a cannon shot or some kind of an explosion. Yeah, Griff points out he's got a nice trade on KO in the chat room. I didn't have a chance to get to that today, and I got another meeting I got to go run to shortly. But yeah, pretty much continuations in the market. Market follow through to the upside. Monitor your stops and your open risk, and have a plan to preserve the profit that you insist is yours. I have no idea how long this madness can continue, but I'm just going to keep following the money. And with about a 1% trailing stop in the S&P and the equivalent in others, basically a 1 ATR, and just marching that north as we go. All right, that's everything I got for you. I want to get this processed and posted, and let's keep up the fire and get back to work. Take good care.